Welcome, everybody, to This Week in Games, episode 174. Daddy's back. Eric Kress is back full force. Eric Kress, we've missed you. The whole audience has missed you. How are you doing?
I'm doing okay. It was good to take a week off, but you guys just let Ethan slide last week, dude. I was annoyed listening to it.
I did it just because I knew you were going to be at home angry.
So, I mean, we'll get to it in a bit, but I have to speak up for the audience when I say Ethan's got to keep its mouth shut.
Oh, man.
I do have to say, Ethan has an audience because I was connected by a certain public company CEO over the weekend wanting to come to a podcast. I was like, yeah, sure, I can host. He was like, not you, bro, Ethan.
No.
I was like, all right.
No way.
Okay, I'm making an introduction, so I'm sorry. So he has an audience. It's insane. Actually, the articles that we're going to cover today is we're going to talk about NFT games. Sales hit 5.2 billion in 2021. So interesting article on VentureBeat. We're going to talk about FIFA Ultimate Team cards aren't gambling, Dutch court says. And perhaps we're going to talk about why CPMs increase following app tracking transparency. So into the personal updates, the most interesting stuff. Eric Kress, what is going on in your personal life?
Yes, I mean, I'm sure everyone's just waiting, bated breath for me to tell me about the update of my son. But we went to this big tournament and they got beat the first fucking game out of the gate. It was really disappointing because we were like second seed, but we played this really good team that beat us. But to show like how close the teams were, we actually beat the team that won the whole championship in the normal play. So they were really, really good teams, really fun. I was also reading. I'm just going to go through a myriad of updates. I think that's all the personal stuff that anyone wants to handle at this point. But first of all, the finalists were announced for the Pocket Gamer Awards. And it was basically a who's who of advertisers for Pocket Gamer, clearly, right? So Zynga was the big winner with best advertising in UA and best publishers. UA? Really? They're getting a best reward for UA? I don't know about that, right? And then the best challenger for the...
Our friend Nebo's going to have some words with you.
Dude, Nebo's hasn't even been there to make a difference yet. He hasn't even been there that long. Anyway, all right.
For like 2 years.
Nah, has it been that? It's been a year, dude. Has it been
go ahead. It's like a year and a half or something.
Okay, best challenger in the App Store is Amazon. Excuse me? I don't even understand why they're even in the discussion. Samsung Galaxy? I think I've seen some advertising on Pocket Gamer for a few of those, right? I don't even know why this category exists, frankly, because alternatives to the App Store seem relatively irrelevant, but maybe I don't know. Game of Year Award, of course, Farmville 3 is up there right at the top, and that game didn't really do much. Hitman Sniper, Stranger Things, Puzzle Tales, really? You know, like, and then PUBG New State, which is probably the worst, right? Because that is like been the biggest disaster of 2021, right? And then or 2022, and that's like up there for an award for best game of the year. Absolute train wreck. Like it is going to do 40 million. It was supposed to do $1 billion. Okay, just to put it in perspective. So. You know, I think Pocket Gamer's objectivity around these awards is always suspect.
We should do our own. Like we should do our own like this. So best attribution platform, AppsFlyer, hands down. Best partner for game companies, Google. Best mediation platform,
payments,
Iron
Xsolla.
Source. Easy. Yeah, alternative payment, best, Xsolla. Not even a competition.
So. I mean, Jesus, it's just ridiculous. All right, the next thing, Activision announces Warzone for mobile. Why? I thought this was common knowledge at this point, but there was all these press releases about this game existence. It's being run by Digital Legends. And I think, the warning sign here is with PUBG New State is like creating new games in the same fucking genre with the same IP is freaking risky at best. Right? Not to mention going after fucking Tencent, dude. They're ruthless, dude. Why would you do that, right? So, I mean, I think it's it's hard to bring audiences from one experience to another, and then couple that with going against Tencent. It doesn't even make sense, right? And so we'll see. I'm hoping for the best that that they can pull this thing out, but I think it's going to be a real challenge to get any scale in this game. Let's see what else. Oh, we have a new crypto czar. Someone's mentioned this in the Slack channel. Playtika is hiring this guy, Dr. Jacob Mendel. The fact that he's a doctor is impressive on its surface, anyway. To basically expand Playtika's reach in Web 3.0 and GameFi. Right now, this guy actually is almost a true crypto czar, dude. The guy's been doing blockchain as well as cybersecurity for the last 20 years, right? He's clearly not a game designer by any stretch, but he probably understands this. Definitely has a better background than the former crypto czar. But I think this kind of just is indicating, clearly Playtika's in a really tough spot, right? Like, they need to make some investments and find growth areas elsewhere to kind of bolster the story, because I think social casino is going to continue to struggle. But this guy seems to be the right type of background to make a go of it. So let's see what he does. So I think we're going to stop tracking the former crypto czar. Now we're going to trap this guy. This guy is the one to watch to see what he pulls out and does. Finally, I think Mishka's going to cover a little bit of this. There's these funds that are being raised during the heyday of investment in gaming after this big, huge correction of all things that are frothy as fuck, like Roblox and AppLovin, Iron Source, Playtika to a lesser degree, and I'm missing one. Oh, Unity. Oh my God, these things are just getting annihilated, right? But anyway, these funds are being raised, I think, during the fervor and insane valuations from last year, but we're seeing Makers and Griffin run a $500 million fund and a $750 million fund. And Andreessen supposedly is another $600 million fund in the works.
SPAC? Yeah.
No,
what?
It's not SPAC. It's not SPAC. I wanted to talk about this. I have some thoughts on this. Are we covering this?
Go ahead.
But wait, no, hold on. I'm doing self promotion here. Finally, I'm trying to follow Mishka's lead here. But I am actually going to look for more opportunities to do more consulting around VC side, because it's something I haven't really done as much in, and I'm interested in knowing, either advising game companies that are in the fund or looking at investments, but give everyone a pragmatic view on what the opportunities are, right? Both across crypto, free to play, and console. So if there's any need there, just let me know.
Are you pitching right now? What are you doing?
I am pitching.
Are you selling or asking?
Unabashedly. I already said that I was going to do it.
All right, that's fine. All right.
What do you want to consult in? What do you want to consult in? Like, what's the what do
angle? What do you
studios?
bring?
Yeah, like what are these studios asking Crest for?
I mean, I think basically market fit opportunities, product. What the consumer wants, where the target markets are, where the right genres, the type of games that they should be making, and what features that should be in the games that are competitive. Like kind of like more tactical stuff like that, as opposed to this broad swath of here's this big market and here's that big market. Here's the that too though maybe, but more product related stuff, market related stuff.
Perfect. Suf, what do you have on the VC funds?
I just think it's amazing, right? I did a Twitter thread about this the other day, because Andreessen's hasn't been announced yet. It's just they surfaced it through the SEC filing, right? But let's assume it's 600 million, right? Like that's the number that's floating around. So you've got Makers announced 500 million. So Griffin announced 750, right? 2 weeks ago or whatever. When did we talk about it, Chris? Was it 2 weeks ago or last week? I think it was last week we talked about it.
I think so.
Anyway. Griffin 750, Makers, and these funds have been in place for a long time, right? But they all announced, because you can't let Griffin, if you've got a fund that you just raised, you can't let Griffin announce and then not announce it, right? So they all kind of announced it back to back. But see, Griffin announced 750, Makers then the next week announced 500, and then Andreessen 600, if that's the number, right? That's almost $2 billion that's dedicated to gaming. That's amazing. That means that right now, this moment in time is the best moment that's ever existed to make video games. I mean, that's what that means.
Yeah.
Right? There's never been this amount of money available to game developers to build video games. And I think it's worth just recognizing this very special moment in time. And I mean, you look at all those funds, and then you've got Play and Play Ventures, and as well, that stands out at the top tier, and Galaxy Interactive. I mean, you've just got so much capital available from just really smart, savvy people. It's just an amazing time to be in video games. And I think, the only issue is, like, when we talked about this, I think last week, it's like, well, there's that much money chasing deals. It's just going to bid up the price, right? I mean, it's just going to bid up the valuations. But is that a bad thing? I mean, these companies are probably worth, if you're going to be, if you stand to become a successful company, you're worth a lot right out of the gate, like just with the team, right? I mean, if you've got the talent to build a successful game, then that's worth a lot. It's not worth, $5 million, pre-money valuation. It's worth 20, because you can build something that could become this massive property, right? And like, my thing and what I always hammer on, when I do games investing, is the concept. Yeah, I want to have a sense of what that is, right? I want to know what's being made. But the most important thing I look for is, like, does this team deeply understand monetization, especially on mobile? Because that's the core skill set. And like, one thing that it's kind of funny, because UA teams get a lot of credit for the success of a game. But really, if you've got a game that monetizes well, UA is a joke, right? It's just creative. It's a creative process, right? Like, the media buying is easy. It's straightforward, and a lot of it can be automated. But the difficult thing to get right, and the sort of vector of success, is just, can this team make a game that monetizes users, right? And whether that's at like a kind of core level of ARPPU, or that's a casual level of ARPPU, and the DAU levels, vary across whatever that is. Like, but can you get that right, and can you make workable unit economics? And if you can, UA is just plug and play. It's like, yeah, set it and forget it, right? It's not hard. I mean, there's management stuff, and it's an effort, but that's not the hard part of scaling a game. The hard part of scaling a game is building unit economics that scale. And so that's what you look for. That's what you look for in investing in these companies. Do they have someone on the team, preferably that's done it before, right, with a big successful game, and they owned that? But can they build a monetization? Can they build a game economy, right? And then, like, that's the issue with crypto too, because what you have to do then is you have to layer on this whole other dimension of an economy and get that right as well, because you've got the in-game economy and you've got the secondary economy with the crypto assets. Like, that's the difficult bit, right? But like, with a straightforward, like, kind of boring old mobile game, can you build a game economy that scales and supports UA scale? And if you can, then that's it. That could be that's a $1 billion company, or like a $500 million company, or whatever it is. But like, that's what you have to look for. And so it's like, well, okay, if that's the calculus, you've got all this money chasing these deals, they're going to get bid up. But I don't think it's a bad thing. And the other thing I'm seeing now is that there is no sort of like center of gravity in San Francisco. It's worldwide, and people can stay wherever they are and make a successful mobile game. They need the experience. They need to have built that experience somewhere else, but then they go home. You go home and you want to make a hit mobile game in Slovenia, you can do it. You want to make it in Slovakia, you can do it. You want to make it in Taiwan, you can do it. Anywhere that you feel comfortable living, you can make a hit mobile game from there. And that's like a really powerful thing. Like, that's not true of every single category of consumer tech, right? But it is for mobile games. And so that's what's so nice about this moment in time. You've got like kind of post-COVID realization that, like, we don't need to be in San Francisco. We don't need to be in London. We don't need to be in Berlin, Helsinki. We can be wherever we want. If we've got the team in place, this could be a hit game. And the valuations are probably more normal or like more realistic than what they were before when they were underpriced. Right? It's just an awesome moment to be in games. Cress is looking at me skeptically.
When stocks are down like 70%, like from these artificial highs, and these valuations were all set at really high levels during the previous 2 years of investment. It sounds like a sub bubble within the market bubble, right? Like, so I'm not going to articulate this well, but like, the fact is that private companies their valuations are never checked the way public traded companies are. And so we're just sitting here at really high valuations that we've seen for the last 2 years. And with this kind of money chasing it, it's going to just get worse, right? And are any of these companies ever going to realize the expectations that were set over the last 2 years? Like every single company that was like absolutely nutty trading for the last 2 years have suddenly realized. You're talking about a decimation of value. Stillfront is down 70%. AppLovin is down 70%. Skills is basically gone to zero, right? I mean, that's
okay,
fact.
but that's
Yeah,
No, I
that's,
mean, dude, you had ARK Investments and spending insane amounts of money buying the stupid fucking stock for years, right? And
well, that's
people,
Kathy.
falling in.
That's Kathy Wood, man. These VCs.
Well,
are
that's what I'm
smarter than
talking
Kathy
about.
Wood.
She's an example of the exuberance of this nonsense.
Right.
Like, and
Yeah,
ultimately, fundamentals matter, right? And so, if these companies cannot realize, like Rec Room and like these type of companies that are not generating a lot of money or cash flow, right? If they can't get to these levels of profitability and prove out the thesis around what they're doing, then it's going to be a challenge for everybody.
No, 100%. There's gonna be a reckoning in these growth stock or these growth stage like crypto based companies that raised at like insane valuation. There's gonna be a total reckoning there. But that's not. I don't even put. To me, Rec Room's not a gaming company. Right, Rec Room was like a crypto bet, like that. That's and that was just I don't know. It's
Rec
that's
Room.
not. Rec Room's not a gaming. Like, is that a gaming company? That's
No,
not. They're not making.
No, it's not. It's like
No,
a
they're
Second
social.
Life type of thing.
That was sorry, not crypto. That was a metaverse bet. Sorry, that was a metaverse
bet, right,
You know,
not crypto.
But yeah, that hype stuff. Yeah, put that aside, right? I mean, but the thing is, like, the public stocks are downstream from the early stage stuff, right? Yeah, there's a public stock across. There's a compression of valuations in public stocks across the board, not just with gaming, right? Yeah, the gaming stocks are in the toilet, but so is consumer tech.
No, you're not missing what I'm saying. You're missing what I'm saying. Actually, the traditional game companies had a shitty year last year. This year, they're actually holding up because they actually have real businesses. The ones that are getting punished the most are the ones that are the more speculative assets, like Roblox. I'll just use that as an example. Because
Right,
there's a lot of them. Like a lot of the SaaS and software as a service type companies are just gotten crushed. But Roblox, which the anticipation was it was going to grow 30% a year for perpetuity, right? Because it's fucking, the best thing. But that's complete bullshit. I've been saying that all year last year that like they can't grow geo or demo, and that's their challenge, and that's exactly what happened. And so what I'm saying is the expectation of something like Rec Room is the same thing, but they're held in a private setting so that there's no drawdown of value the way you do on the public markets, right? Now, I'm not saying that Roblox is doomed by any stretch. I'm just saying that their valuation is coming back to real life and expectations are getting reset. So when you have $2 billion chasing these type of opportunities, that creates even more potential for, raising the valuations of things that the value is never going to be realized. So that's the scary. So at the end of the day, and I hate to be the old man in the room, but fundamentals matter.
So going back, like I just want to say three things about VCs and this. So for those who are raising, I think it's really important to think about three things. Number one is understand what the investors are buying and having a story that supports that. So naturally, everybody is investing into metaverse and crypto and so forth. So that's the story you have to be selling, or something else. But you have to understand what they're buying. Number two, when you're raising, please remember that it's a two-way street. When you're working with an investor, it's a business partner. So you have to not only think about what you're bringing to the table, but also understand what the investor's bringing into a table. And for that sake, when you see these funds raising, more funds like 750, 500, and becoming these billion-dollar funds, they have more resources to help you. So it's actually also a positive thing. And number three, which is really important, that is getting a reference on the investor. So, everybody knows that investors will be doing due diligence on you. They will be asking reference about you, but you should be also asking reference on the investor. And taking back to the original story of Makers Fund raising $500 million, if you happen to be in a position where you have a term sheet from Makers Fund, I think you'll love the process of asking for references because you will be hearing only praises from around the world. I think it's a fantastic fund, and just big kudos from me. I wanted to bring in one news that is just since Ethan is not here, I can cover NFT in a full calmness.
Let's take a week off. Let's take a week off, dude. Let's take a week off. No NFTs, no Web3.
Really?
Let's have a clean episode.
Come on.
All right, go ahead.
This was interesting. So there was an article on VentureBeat that said NFT game sales hit 5.2 billion in 2021. So NFTs are digital blockchain linked assets that, unlike cryptocurrencies, are completely unique and not interchangeable with any other asset. Examples range from programmable art to ownership records to physical assets and plots to virtual land in metaverse-like platforms. Now, the large NFT sales for all markets hit $17.6 billion in 2021, up to 200 times from 82 million in 2020. Now, there's of course no indication how big is the share of money laundering of the total sales. And you're asking, like, how do you launder money in NFTs? It's pretty simple. Transactions are recorded and on a public ledgers, but the purchases can remain anonymous. So that's a huge boon for anyone looking to discreetly wash assets. Anyways, there are more than 2.5 million digital wallets holding or trading NFTs, up from just 89,000 wallets the year before. So of course, based on all these numbers, there are more people engaging. That's definitely a fact. And if every one of those wallets would have participated in NFT purchases last year, that would have meant that average purchases of NFTs during the 2021 would have been over $7,000. Now, are people engaging because they believe in the transparency and security of digital ledger, of blockchain to authenticate unique digital items, or are people simply being lured in by get-rich-quick scams, pump-and-dump schemes? Probably both. So in regards of the trends, the report said that during 2021, NFT projects evolved from simple tradable collectible into more sophisticated virtual assets targeted towards the metaverse. Dan Kelly, who's the CEO of nonfungible.com, which originated this report, was asked about the shady nature of the NFT sales. And what he said in his statement was that, on the contrary, we believe that today every community that was created in 2021, every community, has a digital identity. It is essential that there are strong values carried by strong communities as we start to build a whole new Web3 industry. Now, in 2022, the report... I know. It just... in 2022, the report... this was probably an interview at South by Southwest. In 2022, the report expects the NFT market to continue to be volatile. It states that there are real need and an opportunity to build infrastructure and utility services for this emerging market and asset class, such as financial and risk management products, and concludes that the NFT market has barely pushed the boundaries of its underlying technology. Overall, I think, sadly, this is again one of those puff pieces that VentureBeat is doing quite often these days. Personally, I see the current iteration of blockchain gaming going mostly to zero in the next year or two, assuming the current trend of macroeconomics with, the war, the looming energy and food crisis, the massive slowdown of the Chinese economy, and kind of like the nonsensical nature of most of these products. I think it's just around the corner. Now, why has metaverse, blockchain, NFTs, Web3, why have they been so hot? In the rise of 21, the cause is directly because of the overheating of the market. During the same time, the price of rare wines, collectible cards, Rolex watches, and really anything unique has skyrocketed. And NFTs are sold as unique assets, and thus they would have the same characteristics as these physical rare assets in terms of value creation. So all the money was flooding towards those. Now, why did the funding explode for blockchain gaming companies? Well, one is the rise of cryptocurrency valuations due to, again, overheating of the market. These companies also started investing. These companies who have blockchain like Solana or the trading FTX, all of them started to investing into blockchains with excess funds and quite honestly limited understanding of games business. Of course, they're leveling up there. Now, VCs also raised crypto funds as the market overheated and there was a tremendous demand for this. And of course, it makes sense for a VC to raise a fund, and the bigger the fund, the better, because they get a carry from the funds that they raise. Now, the VCs started competing with these new crypto funds to get the deals done for blockchain gaming companies, and that essentially skyrocketed the valuation because you had to move extremely fast, because getting money for any kind of a blockchain project, at least a while back, was extremely simple, and it's still not that difficult. Now, personally, I don't really like the current iteration of blockchain gaming because the focus is purely on easy money and quick wins. Nearly every play to earn I've seen is pretty much a Ponzi scheme, and while the notion of earning money while playing a game is in theory a good idea, the reality seems to be far from it, because once you add earning to anything like sports, people start cheating. They cheat to win. And I think Axie Infinity, everybody knows that game, and that is a kind of like the saddest example. It's a game that nobody plays for fun. It's a game where wealthy Westerners rent their NFTs for the poorest people in the world to grind more wealth for them. And just to be clear, I'm a capitalist, like everybody who listens to this. But this is like a digital colonialism that is happening. So, anyways, to conclude, I don't see that this Web3 at the moment is the sort of a free-to-play early days, which is something that literally every person has to say in all the interviews when they get funded or where they're raising a fund for crypto. It's like, oh, we're in early days of free-to-play. I see this as the early days of .com, like a .com bubble where 99% of the companies went to zero because, they were kind of nonsensical. And then later on, we kind of laughed, like, how was this valued so high? I don't know, pets.com and whatnot. But in the long run, to be clear, I think blockchain technology will prevail. And it's really not even about whether people will have the demand for blockchain games or blockchain technology. I think the corporation just have such a strong will to make it happen that it will happen. But overall, on the long term, very bullish. On the short term, not so bullish at all.
Oh, God.
I mean, I think the thing is, like, I don't know, like, if you go back to 99, right? Mm-hmm. People talk about pets.com. Well, Amazon was started in 99, right?
Yeah,
I mean, like,
exactly.
there were, good companies can get started, 94, right? Okay, so, but even earlier than that, right? So, I mean, good companies can get started at any time in any sort of market condition. I think, like, I've been, like, really, really careful about any sort of Web3 projects. I'm not one of these, like, ideological crypto skeptics, right? Like, I mean, there's people like that sound as ridiculous as the people that just go and cheerlead, right? Like, crypto's a Ponzi, crypto's a scam. Like, well, that's not true broadly, right? Yeah. I mean, it can be, in a lot of cases it is, but it's not true broadly about the category, right? And that sounds as dumb as saying crypto is the future of finance. Crypto, Bitcoin's going to $1 million a coin. Like, that stuff is just idiotic and hollow. But, like, to me, it's, and I talked about it earlier in the podcast. Like, I'm looking for teams that really understand that complexity of having essentially two economies, right? And, like, if you can navigate that and then build an actual fun experience where the crypto assets actually add value, like, then that's great. Maybe that'll become a massive, a successful game. And and the good thing about crypto is you have high RPPU, right? Incredibly high RPPU, so high ARPU, mm-hmm. right? And so maybe you can have a game like you saw. I mean, Mobile Strike had like 100,000 DAU, like at peak, right? But obviously that turned out to not be like a robust, durable game that could be sustained for a long time. But it made a lot of money. And I think with crypto, you can even have a smaller base but higher ARPU and make more money. Like, you could have a successful crypto game that has 20,000 DAU, right? I think that just makes, on an absolute scale, a lot of money. So, like, I don't know. I'm getting bored of all these, like, high-minded, big concept pieces. We get it. We know what crypto is, right? Show me a great game. Show me something that's fun to play. That's not a.
I think what you're describing is mutually exclusive, right? Why build a fun-to-play game for an audience that doesn't want to play a fun game, right? They want to play a game in which they can make money. Yeah, and so, like, that's a Rubik's Cube that can't be solved, right? But it's irrelevant. Gameplay is irrelevant.
I don't think so. I think it gives you like a deeper appreciation of the gameplay. Like, think here. No, the example I always point to, because I advised the Jagex deal, right, when they got acquired by Carlyle, and there was a guy on the deal team at Carlyle who gave us this. He like intro to. I'm blanking on the name of the game. Help me out. Their Jagex game. You know what I'm talking about. RuneScape. He gave us like an intro to RuneScape, and this guy had been playing this game for 15 years, right? He was my age. He'd been playing it since he was in college, and he just loved that game. Now imagine if you could actually own those assets, right, and keep them with you, and then because Jagex released like a new RuneScape. It was like updated with modern graphics. If you could port over all those items, now there's nothing stopping you from doing that with just a normal game, right? You don't need to be on the blockchain. But I think that adds like another dimension of value and appreciation and sort of emotional investment. That you actually own these assets that you've built and crafted and mined and whatever in the game over the course of years and years and years. So I think there are specific types of games like that where you're so connected to the relationship that you built and the time that you've invested in forging. Think about World of Warcraft. I mean, you can imagine that. Right, like I think there's an NFT layer that you could present there that provides a lot of value to the gameplay experience, right? But then the pool of people, the TAM is smaller because you start with wallet holders, right? So that's already a very small number, and then within that you've got to find the specific genres and the relevancies there. But like I see that as being valuable, like for a game like that where you really invest time and you invest your emotional self. Like having the ability to really, truly, genuinely own that asset, that feels like it adds something. It's not just play to earn.
Yeah, and I agree. Like, just want to be clear. Like, I understand on that notion. I said 99%. I was saying 98, but I talked to a very senior investor, and he was actually saying 99, and then his company was also doing blockchain. So I was like, all right, let me bump it up by 1%. So kind of everybody understands that, but everybody actually uses who I discussed use that analogy of Amazon. Like, there's still going to be that one that's going to prevail, right. This bloodbath that is going to come. On that note, thank you everybody for listening to the three dads, and on to the next week, and go and see Eric Kress and Eric Seufert in flesh. Bye bye everybody.